For the the first one I did is a self-managed program, like just like Cineplex. That's the self-managed program. That's the way you would have to account for it. But what is the third-party program? What is their obligation? So if I go to Swiss Chalet, I had dinner with them, so they generate like a revenue for $60, just for argument's sake. Can they recognize their revenue right away? What is the one thing they are committing to me? When I get the $60, I'm getting scene points, right? But who's offering the scene points? Not them. It's Cineplex. So the obligation, it goes back to Cineplex actually. But what do they have to do with Cineplex so that I can get the points? Does Cineplex will give them those things to them free? Cineplex is going to charge them a fee, right? So that they can buy off those points for Cineplex to give it to me, right? So what is their obligation? What is Swiss Chalet's obligation? What do they have to do to make sure that I have the points? Think business. So what do they have to do? At the end of the day, my obligation is not fulfilled by Swiss Chalet. My obligation is fulfilled by Cineplex. So what does Swiss Chalet have to do with Cineplex so that I get my points and I'm getting to be serviced by Cineplex? What do you think has to happen? Think business. What do you do? No, Cineplex offering this program not mainly to satisfy the customers, right? They're also making money out of this program as well, right? That's why, when Air Canada, when they have the Aeroplan program, they actually sell for quite a lot of money. They sold that program at one point. They brought it back, I think, at the end. But then they decided it's a wrong strategy, so they bought it back from the person they sell it to. But what do you think they need to do? So from Swiss Chalet's perspective, what do they need to do to make sure I get the points? Nobody can think of anything you can do? Are you sure you're in a business program? You need to be creative. Think openly, yes. Who has to pay to Cineplex? Swiss Chalet have to buy off the points from Cineplex. That means they have to pay them, right? Nothing comes free these days. Okay, nobody's going to give you like a favor or whatever. There's no favor, but it's business, right? So you have to pay. So under what condition, from a revenue recognition perspective, can they recognize the revenue of my dinner, $60? What has to happen in order for them to recognize that $60? What is the obligation Swiss Chalet has to do in order for them to recognize that revenue? You already answered the question. I'm just asking the question a different way. Okay, I'm going to ask the question again. I need you to think through this process. This is a business process, not an accounting process. I want to ask you, from Cineplex perspective, what is required for them to do to recognize that $60 that I've incurred in the meal into their revenue? What do they have to do? Because they have to recognize all the expenses, right? So what do they have to do in this case?
They split it up between what they provide and what Cineplex provides.
Do they really care what Cineplex provides from Swiss Chalet's perspective?
How much money goes from Cineplex? How much money goes to their
So if you were Swiss Chalet, the only thing you care about is what?
How much I get? How much they get?
How much they're getting for what? I'm just trying to understand what you're saying.
I pay $20 to Swiss Chalet.
Yeah.
One of that goes to Cineplex. 19 goes to Swiss Chalet.
Why does that one go to Cineplex? You are right, I think indirectly, but then how does everything fit in? I guess the question is.
Because a portion of the money that they're getting is not theirs to keep.
It's not theirs to keep, but they are the one that provides the service. Why do they not keep that $1 as well? I think you're on the right track, but I just wanted to ask your understanding. Now, what you need to think about is that then Cineplex, for Swiss Chalet, in order for them to recognize the revenue, the only obligation thing that they have to deal with me is they have the points to give to me, right? That's all they have to do. As long as they have the point to give it to me, then they're okay because they fulfill whatever they need to do. Whether I'm getting serviced by Cineplex or not is a totally different issue in this case. So in this case, all you have to make sure is then when they sell me the meal, they have the points, meaning that that point in time, they have to be able to they already have bought the points from Cineplex to be ready to give it to me. That's all they have to do. Because there's no further obligation from their perspective. Because the rest of the obligation is all fulfilled by Cineplex. Do you follow? So as long as Swiss Chalet is able to give me the points, when I sign off the dinner, I give them a check. I saw in my statement or something, or whatever. But actually, Swiss Chalet, I don't know if you eat from them. If you do have a scene point program, actually when you pay off the credit card, whatever, they actually give you a receipt to tell you how many points you have. Then this way, as a customer, I know that I'm getting my points. That's all that counts from their perspective. If they did this, they can recognize the revenue right away because in effect, they have done whatever they need to perform their services to me. Do you follow the concept? So on a third party, then, all you needed to do, they can recognize the full revenue as long as my points are given to me at the time. So what they need to do is when they recognize the revenue, they have to recognize the cost of the points at the same time. Do you follow? Okay, so in this case here, what we have said, take a look at this question together. Like in this case here, what they're saying here is, they said that this gas company provides registered customer with 1 travel point for every dollar they spend on the gas. So they said that they're buying from a third party for 1 cent for each point. So in 2025, whatever the date is, they sold $1.4 million of fuel. They awarded 1.1 million of travel points. And the cost of the fuel sold was 1.2 million. And they said that CGI paid for the travel points awarded in January. So what do I need to do? So in the very beginning, I can recognize the full revenue. So in this case, the total revenue I actually incurred is 1.4 million. So I can debit cash for 1.4 million, and I can credit the sales for 1.4 million, right? And in the meantime, the cost of goods sold that I need to recognize is basically 1.2 million. That's given to you in the question. I can credit inventory for 1.2 million. In the meantime, while they're recognizing the sale, they have to recognize the award expense right away. And they said they're paying 1 cent each, and they've given out 1.1 million points. So they have to take 0.1 cents, multiply by 1.1 million. So that's $11,000, right? So you have to debit the expense for 11,000. They said they won't be paying that out until the following month. So we charge it to accounts payable, right? And then the following month, you will pay them out. Do you understand the concept? Are you okay? So for third parties, as long as they have the point to give it to you, that's really what it counts. You can recognize the full revenue. You don't need to defer anything. Do you see the difference? Are you okay? Because ultimately, they're not obligated to do anything else for you except giving you the points. As long as you get it, and everybody's happy. Are you okay? So that's the difference. So make sure you understand many times when you're giving a scenario, make sure you understand, are they the one that's actually initiating the program, or they're actually just buying off points from a different vendor or something, right? Okay, I hope you understand the concept. If you don't understand the concept, please ask me the questions. Everybody's okay? Okay. Then the next thing I want to talk to you briefly, unfortunately I don't have a slide here to illustrate the concept, but normally speaking, what we have a concept of onerous contract. I would suggest you go home and take a look at the slide, and next week I may be able to take a look at the slide with you together if we have time. Now, onerous contract, what only happen is that then when you are signing a contract with someone, when you try to back out of that contract many times, you might be have to pay a penalty. Okay, then if that's the case, the contract is onerous, then if this is what's going to happen, then you will need to accrue for the liability up front. Okay, so what does that mean? So I give a very simple example. Many of you may be leasing maybe renting like an apartment or something. Now, when you have finished, let's say it's a whole year rental, after 6 months, you decide that I don't like this place, I need to move out. The landlord would not allow you to just move out, right? They would need to ask, they would say, you need to pay me the rest of the 6 months, then you can move out. That means this contract is onerous because you do have a penalty to exit the contract early. And if that's the case, you need to accrue for your liability. That's one. Are you clear about the concept? However, sometimes you might be giving the option, right? In this case, what is my choice? I do want to move out So I either pay the 6 month rental to the owner, the landlord, and I can move out. But what is my other option? I can sublet it to somebody else, right? As long as the landlord is happy with what I'm going to sublet it to, and I can get a recovery, maybe say for 3 months rental instead. So in that case, then is the contract still onerous? Do I still need to pay something? I am paying out 6, but only getting 3 back. I'm paying out 6, I'm getting 3 back. Am I better off or still worse off? I still have to pay something, right? So the contract's still onerous in this case. But then in this case, what am I trying to accrue? Am I accruing 6 months or am I only accruing 3 months? What we are saying to you is that then every time when a contract is onerous, you might be given different options. You have to pick the accrual based on the option that can mitigate you to the extent that you have the least damages that you have to incur. So in this case, at the end of the day, in this case, I'm either paying out 6 or I'd be only paying out 3 because I'm getting 3 referring. Then in that case, I'm only accruing for the 3 because the 3 is the least damage I'm going to incur out of this arrangement that I may have. Do you follow the concept? So a contract is onerous when you try to exit and you have to pay a penalty, and there are penalties involved. But then when you're accruing it, you got to pick the option that's going to give it the mitigate impact, the minimum impact. That's what we're saying here. Is it okay? So let's take a look at handout question number 4. It says here, contract A is for a future purchase of 1,000 tons of zinc